All right, let's start it up. So, welcome everybody. Today is Wednesday, March 6th, and actually today is our 90th day of having this event. Not 90th event, unfortunately. It's just been the meetup group has been live for 90 days and it's been growing rather significantly. So I really want to share your guys's the support throughout the last 90 days of this real estate wholesaling analysis journey on meetup.com. And we're still going to be growing from here. So all the 178 members, I really appreciate you guys' support. First thing and foremost, I just want to share that off the bat. And this, I think it is our 30th episode as well too. There's been some of them that had to get canceled like along the way, but there's a total, I think, of like 30 plus hours of content that I've delivered on these events. Because again, we're live every Monday, Wednesday, and Friday at 6 p.m. Pacific Standard Time. So again, if you've been joining some of these events or any future people that are going to be coming in or members that are going to be coming into the meetup event, thank you again for the support. And again, I just want to thank you guys for the last 90 days that we've been growing exponentially, really good. Other than that, my name is Elton, like Elton John. I've been wholesaling. Alexa, stop. I've been wholesaling real estate for the last, I think at this one's like 11 months actually, almost a whole year, really close to it. And it's been really fun, really crazy. But other than that, a little bit more background about me. My background has been sales all my life for the last 10 years. So pretty much real estate is really down just sales and just communicating with people and building relationships. So if you're trying to get into like this business of real estate wholesaling, because real estate wholesaling is one business, there's other businesses of real estate, fixing and flipping, renting, whatever strategies that you have in terms of like real estate, yeah, it is a business that you're running at the end of the day. So do treat it as such. But it's been just a great journey so far in terms of like learning and networking overall. So even if you're like introvert, it really just slowly helps you like just make yourself out there. And of course, some of the things do require for you to step out of the comfort zone, even just outside of like real estate. Sometimes we do have to like step out of our comfort zones to just reach new heights of comfort and of uncomfortness, I mean. And then from there, it just we build a relationship as well too. So other than that, I just want to get started with our 30th episode on our 90th day anniversary of this event being live. And of course, you're probably going to be hearing some noise because it's raining over here in Southern California. But other than that, I won't let it get on the way as well too. But let's get started. So in terms of like real estate wholesaling, it is quite a few steps that you have to take through it. Part of that I built this part of the reason that I built this a real estate meetup series is because part of the struggle I struggle with as well too, and still a lot of people go through this as well too, is going through the phase of just like learning and then implementing and trying to figure out like, am I doing it right or am I doing it wrong? That's considered analysis paralysis, where you're kind of like stuck just doing one thing, but you just don't know, you're unsure if you're doing things properly. But part of the reason that I built that is just because, again, I've been in that situation where I felt stuck and I don't know if I'm doing things right. And it's just part of the journey. The more you start practicing it, the easier it becomes for you to get adapted to it and then start figuring out what best works for you, especially with the markets. All markets are going to be very different out there in all 50 states. Because you are able to wholesale in all 50 states. It's some of them is it's illegal to do it because there's been some changes in some laws where now you have to get like your real estate license to do some wholesaling as well too. So just be aware of your market. Make sure you understand what the laws are on your market area as well too. But other than that, it's again, it just takes time and repetition for you to get adjusted into this. And our main focus on this whole series is basically just going through the estimated repairs and where your offer should be going through there. Of course, all this is not going to be as easy in the beginning, but I've created some tools to help you expedite like that process, which we'll get in touch with that later on. But first thing we want to understand about like what our offer should be and how to estimate like the values and how to find comparables and how to analyze like a lot of deals. The way it's going to be done is we first have to understand the first fundamental, which is going to be ARV, or after repair value. After repair value, it says it in the word, it's basically what the property's value is after it gets fully updated. If it's like something small, if it's like a rental property that just needs quick touches, to something major or a big project, or like a full fix and flip deal, as well too. So those things are going to be taking up those that's ARV is understanding what the property's value is going to be. Part of the ARV process is you definitely have to find some properties that are really identical to the property that you're looking for, which we'll get we'll touch bases more on that in a bit. And of course, when it comes to like investors, the part of it with investors is not all investors are going to be calculating their and doing their due diligence the same. All investors are going to be doing their own due diligence very differently across the board. I've seen it, and I've just seen it so many times, and of course that's why I have the list over here of some of them. In your area, probably everyone's going to be doing it very differently, but it's you have to ask the questions to the investors so that way you can understand how they calculate like their deals. So that way, whenever you present a deal to them, they're going to be able to give you a precise answer, and you're going to know that you're precisely spot on, or you're probably going to be off just like a little bit, or if you're going to be way off whatsoever. And so understand that all investors are going to do things very, very differently across the board. The main ones that you're going to see across the nation are investor number one and investor number two. The numbers do come out very differently, and I'm going to show you guys an example of one of these, which is going to be investor number one. And of course, again, I've built some tools where you can see compare both of them side by side as well too. Investor number three in this example is just a whole different one that I've met along the way here in California, that the investor does things very, very different than anybody else that I've seen. So I just want to put that example out there. Next is part of the process of when we're looking for like deals, because again, if you're driving for dollars in your area, where you're looking for properties that are like outdated or just not getting taken care of, or they look vacant, or maybe the owner happens to be like out of state and they're just not doing anything to it, they're not really maintaining the property, then sometimes you're going to come across properties that are, again, not going to be fixing and flipping. And sometimes you're going to come across properties that are going to be just a rental property where they need just some small touches as well too. And then part of the process is when you're looking at properties, if you get a chance to look at the property inside, is estimating the repair costs. I have these are going to be the average price per on the repair cost, depending on how much of repairs the property needs. This is not going to be like a full detailed breakdown. I like to keep it very average because, like I was talking about the examples from earlier about the investors, how they calculate the numbers very differently. And not only investors calculate things differently, but also when they do repairs, they do repairs very differently across the board. If you were to have two investors side by side, let's say you find a property where it just needs average repairs, maybe like $30 per square foot, and then you calculate it on the property, it needs roughly $35,000 repairs. If you bring it to investor number one, the investor's going to end up telling you, no, this doesn't need $30,000. This actually needs $55,000. And again, it really depends on the materials and what kind of project they're really trying to do. So that can drive like the expenses up. Then you bring it over to investor number two. Investor number two is going to tell you, oh, I can easily get away with like $20,000 on repairs because it's pretty really taken care of it. But again, it just depends on what the investor really wants to spend at the end of the day. So the numbers in real estate, you're gonna hear me saying this a lot. It's a plus or minus game. It's never going to be very accurate unless you happen to be the investor yourself, that you definitely want to have a precise answer. But even so, getting a precise answer is never really going to be precise, because with real estate, every case, it really happens. This is a true statement. With every real piece of real estate, there's always something unexpected happening with the property. If it's like squatters have been becoming like a big thing in real estate, to just repairs as well too, the most common one. unexpected repairs pop up, or even again, there's sometimes even just like the city, when they're pulling permits for the repairs, it's just laws are changing as well too. So like I said, it's just real estate, it's going to be a plus or minus game because things are constantly changing, and especially with interest rates as well too. So again, going back to the repair costs, a repair cost on the light repairs is going to be $10 to $20 per square foot. Average repairs are going to take a little bit more extra work. These are going to be mainly projects done on property on deals that just require a lot of the main areas to be done, like floors, kitchens, bathrooms, painting, some lighting, maybe some windows, doors, maybe something extra like the roof. It just really depends on what's going on. But now we're getting to like those fixing of flip deals where it's gonna be 25 to like $40 per square foot. And then the last one is gonna be like a full gut job or a full strip down of the entire home internally and maybe some externally as well too. Occasionally, you might have to do like a demolition, depending on how the condition, what the conditions of the property is. If it's already like falling apart internally, it's always best to like demolish it. But this gut job repair is going to take like a full workload on it, and you're kind of basically building like a brand new home at this point. And that's going to be between 45 to like $60 per square foot. The only thing too, in some states, it's very expensive. The square footage is going to be a little bit more in states like California, Florida, Texas, New York, Massachusetts, Washington, and some other states as well too. There's going to be states where the labor and the materials might be a little bit more expensive, or just like the cost of getting like the work done. Again, it's going to be more expensive in those areas because those are really hot market areas. So just do consider that because these average repairs are again average price per square feet. They're not really down to like the nudge. But again, don't spend a lot of time trying to figure out the exact dollar amount because at the end of the day, it really comes down to what the end buyer really wants to do to like the project as well too. Part of the process when analyzing like a deal, like I did mention a little bit earlier, is looking for similar properties. And when we're looking for similar properties or AKA comparables or comps, we basically want to make sure that we're comparing properties within specific criterias or parameters. These parameters are going to be the following right over here, which is going to be plus or minus on the square footage, plus or minus 300. In the living space. And what I mean, it's like if a property says on Zillow or Redfin or whatever platform you're using to look for properties, or if you look at the county records as well too, if the property is going to say 1,200, is you're going to go up 300 from that, so 1,500, and then minus 300 from that, so it's going to be all the way down to like 900. So between 900 to 1,500 is where you want to look for similar comps. Same thing with like the square footage of the lots. Sometimes you have to compare lots to other lots. And this is when you're looking at properties that have like a quarter of an acre, a half an acre, 3/4 of an acre, 1 acre, 5 acres, for however many acres you're comparing. You want to start comparing the lot size as well too, because now you're getting into like more land, which again is going to be more on the lot size. Now, whenever we're looking for similar homes in our area or in our neighborhood, we want to make sure that we stick within like a radius of it. I usually recommend 1/2 mile to 1 mile radius. You can go a little bit more than that as well too if you need to. It just really depends on the area that you're looking into. And then part of this is when looking at neighborhoods, part of it is going to be that there's going to be some major roads or double yellow line roads. And what these double yellow line roads look like is basically an example right over here. It's going to be a busy road where there's going to be constant flow of traffic in the morning and in the afternoon from commuters. There's going to be buses, there's going to be delivery trucks, there's going to be construction trucks, and there's going to be semi trucks as well too. So there's just going to be like this heavy flow of traffic of again of uh on a daily basis where you will consider that like your borderline where your neighborhood ends, because again, that neighborhood, it's already a dangerous area on that road as well too, just because of the flow of traffic, but also it just kind of splits the neighborhoods apart. So the neighborhood on this left side is going to be very different from the neighborhood on the right side. Even they're really close to like each other, it's just again that major road is basically splitting it up right there whatsoever, which whenever we look at comps, we always come across these double yellow line roads. Except there's some exceptions you can make where there in some other cities I've noticed that there are some double yellow line roads in every single road, and that's because that's how the layout is set up on that specific city that we're looking into. So just be more aware about where you're looking as well too. So don't, if you see a double yellow line road, just don't consider, all right, this is where my neighborhood is. No, just look at it and see if the layout is the same throughout the neighborhood as well too. And the next thing is biggest one of them all is we want to look for comps that are at least between the last 6 to 9 months. And when we're looking for those comps in the last 6 to 9 months, we want to find at least 3 of those comps. The best way I like to look for comps is by looking for comps in 3 different timeframes. Those timeframes are going to be past. So we're looking for properties that have sold in the past. We're looking at present, properties that are currently under contract right now at this exact second, waiting for it to be completely sold. That's present, and in the future is properties that are already out on the market, but they haven't sold yet. So basically, all the properties that are on Zillow, Redfin, whatever platform you're using. Yeah, those are the time frames of looking for comps. So you want to see what has happened in the past in this area. You want to look what's currently happening right now, and of course, what's sitting on the market, is waiting to be sold. So who knows what the price will be for that project or that real estate property will be like. So past, present, and future, you can pull 3 comps. If you pull more from like the past, it tells you like there's more activity. If there's a lot of activity in the past, there's more under contract. That means the market is changing and is becoming a very popular market. And then there's nothing sold in the past, nothing sold, nothing under contract at the moment, and you see a lot of properties right now just sitting on the market in that area, then that's going to end up telling you that it's not the right time right now. So now you're playing a high risk investment, and so you have to definitely be aware about that, and then seeing who's willing to take on that risk as well too. So now let's break down some how an investor will look at into like in a deal, and also how you will profit from like a deal really quick. So we're going to be going through an investor strategy, which one of them I was mentioning is the 70% strategy. And again, part of the process we're going to be doing this is I do have my tools or my calculators that I design along the way, and my CRM to help you keep a track of like all your people, lenders, buyers, sellers, contractors, whoever it is that you're doing business with, or you're constantly helping you out in your real estate wholesaling. You're able to keep a track of all your properties and your people in one place, so you can have access to that as well too on eltonvargas.com/calculators. But let's look at a deal real quick, and I think you guys should be able to see here. Let me make sure I'm sharing. Okay, yes, I'm sharing the right screen still. All right, so let's look at this deal breakdown really quick. If you guys have any questions along the way, you can drop the questions in the chats. And then if you don't have any questions at the moment, we do have like a Q&A at the end, so you can definitely leave that open at the end as well too. So let's look through this investor strategy. So the first thing we're going to be looking into is definitely like the strategy. 70% is what a lot of investors buy a lot of their deals in. And I'm looking to my side over here because I'm looking at a different screen. But part of that's going to be the very first thing we got to look to. But let's work this in order. So you're looking for properties, or maybe you come across a property, if it's off market because you were driving for dollars, or you send some marketing, a flyer, or whatever it is, you came across a property. So the very first thing we're looking is how much the seller wants to sell, figure out, ask some key questions as well too, to figure out if they're really actually interested in selling. But let's say the seller wants to sell a property for $764,000 for their property, and you're just trying to see if it makes sense. Of course, part of the process is understand what the condition of the property is, because again, if you don't have access to it, at least get like a virtual tour, or have like the seller, or if you're working with agents, have the agent give you like a breakdown of what's happening with the property internally, so that way we can start estimating like our repairs. Again, our repairs are not going to be pinpoint precise. They're going to be more it's plus and minus, so we're going to do our best to find like what those repairs will be. So once we figured out what the repairs are for our subject property, we look like the property needs $80,000 worth of repairs. Now After you find out what the price of the seller wants for the property, and then you get a chance to look at the pictures, or again, get a chance to look at the property internally, or get like a breakdown of what the property needs. You find the repairs. Now we have to look at the area. I'm not going to look at a specific area. I'm just looking for as an example right now. But we find out that the area for this specific property, our subject property, or our potential deal can sell for $875,000. So now let's break down the strategy that our investors going to be looking, so that way we can find out how much they're willing to pay for our deal as well too. Let's say I have a buyer, they buy properties at 70% after subtracting their repairs. So we're going to be subtracting our ARV, 875,000, minus the $80,000 worth of repairs. The investors' new ARV is going to be 795. From that 795, we got to multiply the strategy, aka 70%, or subtract 30% from that 795. And what that number is going to look like is going to be $238,000. So if you multiply by 0.7 or subtract 30%, if you open up your calculators, you're going to get the same number, $238,000, which part of it is going to be towards closing costs. Maybe I told the seller that, hey, Mr. Seller or Miss Seller, we're willing to pay your closing costs for you. So basically, our offer that we bring over to you is what you're walking away with. Because again, we want to make sure that we make our profit on this deal. So our profit for this deal, or for our end buyers, could be 20%, or roughly $159,000. So again, you're just trying to get a sense of how much the end buyers could be making. But now it gives us once you multiply by 0.7 or subtract 30% from the ARV of 795, our end buyers MAO, or maximum allowable offer, for them is going to be $556,500. By you as a wholesaler, let's say you're able to work it out with them, because again, you have your partners or your buyers with you, and you actually end up getting the property on the contract for $550,000. Now, this is when once you get the property in the contract, you start doing what's called a assignment of contract sale. And basically now what you're selling is the assignment of your contract, assigning this deal over to like somebody else, an investor that is willing to pay $570,000, which is going to be a $20,000 wholesale fee. But you might be asking, well, if an investor is willing to pay 500 for it, it's why would I sell it for 570? Is because that's what you, the wholesaler, want to get from that deal. If you want to do a $15,000 wholesale fee, then you can add a $15,000 wholesale fee. If you want to make it a $10,000, you can make. If you want to make it $40,000, you can make it whatever you want to. So that's the thing, is you have to whenever you're trying to do the assignment of sale, of the contract sale, you're just trying to figure out who is willing to pay for the price for your contract of assignment. Again, I don't like to go very crazy in a lot of my deals. A $20,000 deal, if I do 2 of these, 3 of these at a month, that's perfectly fine for me. It's way better than what I used to get paid on my previous job, working 10 hours a day. So I'll take that any single minute. And of course, you have to pay taxes on that as well too. So just be mindful of it. But basically, you want to, when you're doing the assignment of contract sale, it's basically what you want to get for your deal. Yes, you got it for 550. So you already put the work, you already got in touch with the seller, and now you already took the pictures of the property. All you have to do is just bring it over to somebody who's interested in buying your deal. So that's what you want to continue making, and it has to make sense for like your buyer as well too. So let's continue going through the sense of it. So now let's say we find a buyer that's actually willing to pay $570,000 for our property. Again, they have to pay their closing costs. So it's going to be 5% from the seller, 5% from the buyer. So what we get the property in the contract, $550,000, multiply that by 10%, which is going to give us our $55,000 closing costs. And we have to add on top of that our repairs. So when you add the 570, what the investor's paying for it, plus the closing cost, plus the repairs, the initial investment that the end buyer is making on this deal is $705,000. Now, let's break it down from their perspective. So let's continue going down through it, and let's break it down. So eventually, once they fix up the property, it's time for them to resell their deal on their deal whatsoever is they're able to resell the property for $875,000. Of course, they have to list it with an agent, so there's going to be an agent fee. They have to pay closing costs one more time, but now it's going to be a little bit less because again, they probably going to be working with the same title company, if anything, so that way they can reduce like their fees. So we subtract those fees off the bat, and the initial profit is $796,000. But now we have to subtract that initial investment. If you guys remember, the total initial investment was $705,000. Now we have to subtract from 796 that 705, which is going to give us a profit of $91,250, which instead of being a 20% profit, it turns out to be an 11.48% profit. Sometimes some buyers like to go on margins as well too, or margin percentages. So margin percentage will be 10.43, and then sometimes you're gonna have some ROI ones, and then the ROI for this deal is gonna be 12.94 ROI based on that investment. As we checked earlier, the initial potential profit was going to be $159, but eventually, again, because there's the wholesale fee, some other expenses as well too. Maybe they has to do some extra repairs as well too. This game, it's literally a plus or minus game because one, the first plus or minus that comes into play is how much are they able to sell the property for? Maybe they listed for 875, but then when they actually sold it, they sold this deal, they actually turned up selling it for like $900,000. So that's another $25,000 off the bat. Maybe they had some extra repairs, so that's gonna take. So again, it's a plus or minus game on this deal. So when I reach out to like buyers, I like to find out exactly how much profit do they want to walk away with on their deal. Like what's like what's like a great scenario where they make a great amount of money? What does that scenario look like? Or what's like the average that they get like on every deal? And I'll look for dollar amounts. I don't care about percentages, honestly. I like to go straight to like, hey, Mr. Seller, Miss Seller, um, what kind of margins are you looking for, like in terms of like dollar amounts? What kind of profits do you want to get on a lot of deals? Sometimes they're gonna give you 60, 80, 90,000. Maybe some of them are a little bit more aggressive. They're like, I want at least $110,000 for a deal. And again, it's a plus or minus game. So if they're able to get more or they're able to do more stuff to it and get like a bigger value, like I was mentioning on the resale side, then that's where they're gonna be making like a lot of their money in. So it's for me, when I analyze deals, I just think a lot me being like the actual end buyer and then just putting myself into that spot where I will calculate it. And but the cool thing is I don't have to worry about doing all those numbers because that's a boatload of numbers that you have to analyze and you have to like think about. So that's why I've designed my calculators where I put the properties information, I put what the average repairs will be, what the resale value might need to be if I want to make like my profit. Then, of course, I do my analysis. I look for comparables, find out what the market is going for in the area. And then, bam. Earlier was mentioned to you guys that part of the process is investor one and investor two are the two most common ones. Here it is. This is investor number one. And this, this is investor number one. And this is investor number two. So it does the full breakdown for me on how much they will pay for like their deal, what's the most they're trying to get. But of course, get that profit number. I'll get that profit number right over here as well too. So everything gets broken down to me. So instead of spending like a whole hour just analyzing a deal, all I'm doing is putting some information and then getting the results back as quickly as possible. Anything less than 3 minutes, less than 2 minutes if you have trouble typing in some numbers. But it's literally just a selection of what the investment is and of finding out what the repairs is, and then just put in the basic property information from there. So we're going to be using this calculator. Like I said, this is going to be the ARV one. And then another one I'm going to be doing is a complete rental one. So now we're going to go through the process of analyzing some deals really quick. All right, so let's go through here really quick. And all right, if you guys happen to have like an address that you want, what property you want me to get it analyzed, you can go ahead and drop the address in the chat and just like any details that you have on the deal. But if you don't, it's perfectly fine. I'm gonna use the spin the wheel and then see what we're able to get out of it. So we're gonna have what work. Worcester, Massachusetts. All right, let's check it out. So Worcester, huh? Am I spelling it right? Wor, War, oh, Chester, Massachusetts, MA. So let's see here. I'm gonna go through both Zillow and Redfin just so I can look for some of these. So Worcester, MA. And what I like to look for is I like well I'm using a spin the wheel so it's gonna give me like city specifically, but when I like to look at these deals, I like to look at the whole county. The reason I like the whole county is because you get more properties and you get to see how big like a county is as well too. So Worcester County. So I should have taken a great guess on this Worcester County. All right, cool. Now you see, now you get more deals out of the whole county. Um, Chester County, MA. So now we gotta get a boatload of deals there. And let me reset some of these filters over here. Same thing. Oh, I don't have to do it on Zillow. But let's go through like the main city, Worcester. Hopefully I'm pronouncing that right. Um, but let's check it out. Something I like to do, first things first, I don't know this market area, so I'm in the same spot as you. I don't know what the market is for all these cities. So what I like about Zillow, if you're looking at a brand new market, Zillow does the homework for you on how much properties are going for. Again, it's going to be an average. So again, part of the process when we're looking for our deal is finding out what the potential property can resell for, or AKA the ARV. Or after repair value, and then does the homework for you guys. So if you're not using Zillow precisely, then you're missing out, because Zillow has it right over here at the bottom section. It has all of the cities that are nearby wherever it is that you're looking into, and it tells you what the average price homes are going for, or their value is, aka ARV. Uh, Again, this is a mix of properties that are in bad shape to the good shape. So again, it's just an average number. But to me, I consider this as an ARV because again, if this is the average price or the ARV for Worcester homes, I'm gonna use that. If I don't find any comps, then I'm gonna use that as my ARV for a deal, just because I see it as the best fit in terms of like working with it. But all these numbers right over here is basically the ARV for each single city. So wherever it is that you are, whatever state you're looking into, whatever county you're trying to wholesale into, that's a little secret sauce right there. Just give you a heads up. So Worcester's homes are selling for like 390. I'm gonna go with even numbers. I like even numbers. So 390 is gonna be my ARV. So let's say I come across a deal, I'm gonna put it over here off the bat, my ARV, and now let's look for some properties. So I do like to set some filters. First things first, I'm looking for a fix and flip deal, see what we can get out of it. I'm looking for homes, and I'm looking for properties that are at least 1,000 square feet. And I usually like to select the time frame of when's the last time they were built. I prefer homes 2010 as well too. Sometimes I don't like to restrict this because there's no there's properties that you can come across where the seller, even if it's like a brand new home, it's like a 2023 built home, the seller just moved in, but 2 months pass and they have to like relocate for whatever reason. That could be a creative finance offer or deal as well too. So again, that's why it's up to you if you want to limit yourself on that, if you want to look for like older projects. But part of wholesaling is you can do some creative deals as well too to bring over to your buyers. But let's look for some properties that I like to go from low to high so that way I can see what exactly I'm looking at in terms of like, and again, we know like the average so far the ARV is 390. So I definitely want to stick to like something less than 390 or even 350 as well too. So let's look through some of these. Looks like this is a project like halfway finished, so not that. Here we go. Off the bat, great project. So this property is selling for 284,900. So let's put some details. Again, it's gonna be a fix and flip, the 284,900. I don't know if there's any debt, so I definitely have to get in touch with the agent or the seller for if there's any debt or mortgage on the property and how much is that how much of that it is. It's a 2-1-1527. So let me put 1527. Basement. I don't know if a lot of these homes have basements over here. So let's check it out. Basement, it is a full basement. Usually for basements, it's half of the size of the living space. Um, from some other states, I don't know about Massachusetts, so I'm gonna play it safe and just go with that half number for right now. I'm gonna go with say like 700 per square foot. Especially being like a full basement. A full basement basically means it's kind of like a full. It's kind of like a one bedroom, one bathroom like studio apartment. So it just has like a room for an extra bathroom. There's a living room. There's a bedroom, and so on and forth on that basement. So that's what that means. And then now let me just look through the picture so I can like start noting down what kind of project it is. I kind of saw some of it, so I can already tell. Definitely for sure, do some updates like in the kitchen, flooring, some get rid of the wallpaper as well too, lighting. So that's three. Looks like we have to do some walls as well too. Windows. I don't know if they're a little bit older. They do look a little bit older. Sometimes it's good to like keep those old windows, just because of maybe some older windows actually a little bit thicker than a newer window, so the insulation can definitely it's very strong as well too. So it just really depends if all of them are like that. So there might be a chance that we have to do some windows. Definitely the bathroom as well too. Again, lighting, walls, paint. Um, Flooring is the other thing I'm seeing. It's changing the carpet as well too. So that's six things I'm analyzing right now. So that's gonna be like a fix and flip deal. And it doesn't look too crazy. But the other thing I forgot to look for is the description. Because sometimes I come across deals that are like a fix and flip deal, but it happens to be like a rental property. So let me check it out real quick and see what it says. Residence feel charm, character, located in the present area. Okay, waiting for okay. But before I actually move forward, let me check out the neighborhood. Because sometimes some agents like to say, oh, it's in a great area, this and that. But just looking through like Street Viewer, it will actually tell you like a lot about like the area as well too. Um, Seeing some of these homes, are they like newer homes, new project homes, older homes that just have like the ceiling, like old colorings, as well too. And the crazy thing is we're moving to like an age where everything's like black and white. Like we're getting rid of like all those yellow homes, red homes. So everything looks a lot like this, like gray and white, black and white, green, what is that? Green, white. And this is an example of a double yellow road, especially with that big turn. Um, as well too. So it looks like this is like the main road for like the area. And this is kind of like my let me see. So yeah, so it looks like June Street is a major road that I have to worry about. Oh, we have a university right behind it. So like that's why I always like to check around the area and seeing if the schools, because sometimes like I said, I don't know if this property was like a rental, and especially with the university right behind, it can definitely be like a student housing. It will definitely be way convenient for a lot of students to be here. So this could be really great for the student housing as well too. There's no major flood zones in that area because it's not downhill as well too. So honestly, this is like a great area just because of the university, elementary school, two elementary schools actually. Um, and yeah, it just looks like a great area overall. So let's continue going through here. So let's go through some of these numbers, all right? The basement is a full basement. So far what the calculator does is if you're trying to do like a fix and flip, maybe you're an investor, you want to use the fix and flip deal, then the calculator calculates how much your first offer should be, or potential offer or possible offer. If you're trying to do like a buy and hold, like example, this one could definitely be like a buy and hold just because it's really close to university, so it can be a rental unit for those students. Or if you're trying to wholesale, it automatically calculates what you should be getting the property under contract in terms of like wholesaling. The only thing is we haven't done the repairs, but I was checking it out, especially Massachusetts. I definitely know Massachusetts is going to be a little bit more expensive. I don't know how more expensive it is. Here in California, play it safe by like an extra $20 on the square footage, based on on the average price per square foot. So if you go back to the presentation where it was talking about what the averages are. So if my average repairs are $25 to $40, I add here in California $20 extra more for it. But I'm gonna do the same thing for like Massachusetts. So I'm estimating for this one to be $35 per square foot in terms of like repairs because it does have like a basement. So I'm gonna add $20 on top of that. So that's gonna bring it over to like 55. But honestly, $83,000 that might be a little bit too high. So I'm gonna play it safe with like 75. And we also have like a basement. So usually when it comes across properties that have basements or need or sorry, that have a basement, I like to go half of the price of the living space. So if the living space price per square foot is $50 per square foot, then the basement is gonna be $25 per square foot, which is gonna take 17,000. Honestly, I think it can take less, maybe like $10,000. So I'm gonna go with like $20 per square foot. So the $76,000 plus the $14,000 in repairs, all in total is gonna be $90,000 worth of repairs. Honestly, I think that's a little bit too much, just because um the property is really big, but it's pretty simple. Like it's could be like an easy fix and flip. It's nothing like too major, crazy in terms of it. So again, it's a plus or minus game. So it's really unsure. Especially I know Massachusetts, it can definitely get expensive in some areas, and I don't know this area whatsoever. So it's just an estimate. But I'm not gonna spend 30 minutes, an hour trying to figure out getting down to like the dollar. I'm just playing it based on the numbers, if anything, based on my numbers from my experience. And now my investor needs to make their 20% because again, we saw an example we saw earlier. First, it was 20%, but it came down to like 11%. So that's the thing I'm projecting. So this property needs to resell for $485,000 once it gets like fixed and flipped. So let's find out if that's the case. If that's not the case, then then the most that we can sell the property for is 352, which that 352 is really close. It's a lot closer actually than our it's a lot closer to the ARV. So we're going back on Zillow. What properties sell for on Zillow based on what Worcester is 391. So that 350 is really close to that 391 ARV, potential ARV. So I don't know if there's a lot of properties that are going to be selling for $485,000. So now let me do some recon and let's find out what's actually happening in the area. Where's our subject property? Right over here. So like I was mentioning earlier, part of the process of looking for comps, I'm looking at past, present, and future, or what has sold in the past, what's currently in the contract, and what's selling right now. And let me set some filters on here. Our subject property is 1,500 square feet. So I'm gonna go plus or minus 300. So let's do 1,200 and then all the way up to like 1,800. And then right now, it's only that property pops up. The cool thing, how do you find properties that are currently under contract? It's a little button over here on Redfin. Even Zillow has it as well too. You press that, and let's see what we have going on in the area. And as you guys can tell, that ARV is right on point because we have 399 that is under contract, 1553. It's a two-bedroom, one bath property. Then we have this other one selling for $300,000. May Street over here is like 440. So we're not seeing anything really close to like 480. So we're really close to like that 390, maybe even $400,000 on selling. But the best one that I see, it's like this comp right over here. And just by looking at this is like a great property. The only thing is, I don't know if it's a brand new built. Nope, it's 1930. What years of subject property? It's 1950. Oh, and so when looking at comps, definitely want to look for plus or minus 10 years. This is kind of pushing like a little bit, but it's a great project as well too. Just because again, I'm looking for this. And I was mentioning, I was talking earlier, it's a lot of these projects are black and white, gray and white, or green and white, or this is kind of like an off-white as well too. But this is like a great property, well maintained. Again, it hasn't sold, so it's under a contract though. So it really attract like a lot of eyes. And who knows if it's gonna be selling right at the asking or above asking. Um, So the only thing with this one, it is on the other side of June Street because I was considering June Street to be like a busy road. I just don't know how busy it is, based on Street Viewer. Um, Street Viewer was telling me I did see like a couple cars, but let me check it out a little further down the street to just check and seeing. Yeah, there it is. I was looking for like a truck or something, and that UPS truck is just it's just gonna be confirming it as well too. And all these cars, I don't know if they're gonna be coming this way. So again, it's really on like on the path of that. So if I have semi trucks over here, I'm probably gonna be like there's gonna be other trucks as well too. And with the school, university, if university has any projects or anything, any construction happening, I'm considering this to be like one of the roads as well too. So let me look for some comps that have sold though. So this is what's under contract right now. Again, if I uncheck this, you gotta look at the map right here on the left side. You gotta see some of these go away, probably like most of them. Oh, I think it's just glitching out, honestly. Let's see. Yeah, it's just glitching out. Let me refresh it real quick. It should be only like our subject property of that 285. Um, I don't know what's been going on with Refin lately. It's just been like showing me some bad deals. But let's go through Zillow. Did it load up? No, it's still loading. Okay, let's go through Zillow. Let's see what's sold in the last 6 to 9 months. So let me go through here, set my filters again. So 1250, 1750, I guess. Um, has a basement, yep, because it has to be I don't care if it's finished, unfinished. And I'm looking for a house as well too. And did I do the square footage? Yes, I did. All right, cool. Oh, I need to go through the period, 6 months. Let me go through the last 6 months, see what we're able to find. And we have this one that's oh, what? For real? So our subject property sold in November and now it's being sold out again? What? Maybe the listing didn't get removed? Hold on, hold on, hold on. So it sold in November 2023. So it looks like it got on the contract and it got relisted. That's one thing, but it doesn't show me here anything beyond that. So I don't know if this property is actually still available, but let's continue checking it out because again, I'm trying to look for some other comps. This giant home, it's a 3 bedroom, 2 bath. It's all for 415. And this was in January of this year, 2024. What about this property? It's a 3.2. Our subject property is a 2.1. This is going for like 410. But I think what was with these properties is they probably have like a bigger lot. So that's like my only guess with it. Again, then we have this other one. It's in like across the street. Nothing really updated there. What about this one right here? Check it out. Great condition, 375. How much are they asking for again? 285. So a lot of these homes are going for like higher than 350. So I mean, it's already getting like a deal so far. And the other thing, a big red flag for this deal is there hasn't been any price reductions whatsoever because it's been a month. We're heading over to like 60 days right now that it's been like on the market in March 24th. And the property got in the contract like what is that, 3 weeks? I in went through within 3 weeks they got on their contract, but it looks like the seller within a week they got within 2 weeks, almost 2 weeks, they relisted it back again on the market. So the seller backed out. And that's a red flag to me because either something's really going on with the property. It's not a problem with the seller directly that they're like, oh, it has to be done this or anything. Uh, the buyer had to back out for whatever reason. And there could be a few reasons on their side, but it could also be a reason in terms of the property. So there's something more wrong with the property. So I don't know what that extra thing could be as well too. Maybe they did like an appraisal, or they did like an inspection and they found out more things what it actually needs. So nothing has really sold over here on Zillow in the last 60 days. Let me go through Redfin, see what information I can find over here. And same thing, I'm finding the same ones that have sold in the same area as well too. But again, these properties are going for $100,000 more than what our subject property is. So we can definitely get like a deal because we know that the property can sell more than $400,000 off the bat. Um, I'm not saying you can definitely sell for like 484, but who knows? Just because I'm seeing all these other ones, all these other properties that are not in like the best shape or like fully updated shape whatsoever. They're in good conditioning, but again, not like on a fully updated. Actually, except for this one, 415, but it has 3 bedrooms and 2 baths. Our subject property has 2 bedrooms, 1 bath. So an extra bedroom has to get added. I mean, an extra bathroom has to get added, and then one extra bedroom has to get added. So 1 bed, 1 bath needs to get added. And again, that usually is going to bring more value, of course, into like the deal, but it's going to take an extra ten to $15,000 on each of them. So that's gonna be like $25,000 to like on extra repairs to be done on this property. But again, a lot of these properties are selling for for more than $400,000 without like major updates. So if the major update gets done on our subject property, then it can definitely sell for more than 410. That's the thing. But let's go based on what we found right now. So I'm gonna stick with this 390. I'm gonna push it to like $400,000 just because again, not 4 million. That'll definitely be great, right? Um, and I'm gonna stick with the repairs for right now. And then from here, let's again, it's gonna be a fix and flip investor that I'm looking for. So how much would a fix and flip buyer purchase the property for? And they'll purchase it between 24 to like 33 percent off from the asking price. So the seller is asking 280, 284, 900, and then the most that we're trying to get is like 216, 190. But again, that's how much they're willing to get. Sometimes we're probably gonna get some deals really close to that, and we have to like resell the assignment of or do the assignment of contract for our wholesale fee into it. But based on this deal, which I can definitely agree that it can definitely sell for more than $400,000 based on those other properties. Here, let me pull them just so I can get a precise answer. So let me get this one. How much did this one sell for? Price per square foot wise. So this was 1575. 1575 divided by $410,000. Oh, sorry, $410,000 divided by 1575. That's 260. So let me put it here. 260, comp one. Let me find another comp. Um, this one right here, 1642. That's all for 415 divided by 1642, 250 per square foot. That's a 252 per square foot. And I'm gonna put 250, just worst case scenario. So actually, no, yeah, $400,000. That's what we're gonna be end up getting for our subject property. Really close to that. Um, but I'm sure our end buyer can definitely get more than that just because again, those other ones are not fully updated. So just giving like a heads up. So this one's gonna be a little bit more risky. And also the repairs, I'm kind of like high ballparking it. I know for sure it could definitely be a lot less than here, but I'm playing a worst case scenario. But yeah, this will be our price range that we want to get it. And again, if I'm able to get it under contract for 200,000, 215, again, I have my wholesale fee to it, then that's what I want to sell the property because I'm the one who put in like the hard work into this deal. And my end buyer ends up making, again, this is 20%, but it turns out to be a lot less than that. What is close to like 10%. They end up making roughly like $30,000 on this deal. So especially here in Massachusetts. Like I said, I don't know the area and I don't know where buyers, how they calculate a lot of the numbers. So I would definitely want to get in touch with buyers and figure out how they do their numbers as well too. And let them know like, hey, I got this property like already major discount um off the bat. And I know how much you might be willing to like pay for it, and then roughly you could be making between 30 to like $60,000 in terms of like profit. If that's something that you're looking for, in terms of like fixing and flipping it, this could be like a quick deal, honestly. I'll say like 2 months, 3 months tops. So it can definitely be a good deal as well too. And especially if there's some properties that are on the market right now that are pending. So let me go through Zillow. What's pending or on the contract on this area right now? Um, Supply that. Nothing on Zillow for whatever reason. But if we saw earlier, there was some deals on Redfin that were pending or under contract. So we have this one for 399. How much is this one going for? Let me get the square footage of this one. This one is going for 257. So yeah, so 260. So 260 is our price per square foot on this deal, which is gonna make it $400,000. So the ARV is precise, and the ARV, we just had to confirm it. But the cool thing is, I found the potential ARV from the beginning by looking through Zillow and looking at this number right over here where it says how much homes are selling on this city for. And I just played it 390 to like $400,000. And when I'm looking for comps, I'm just trying to confirm, is that number correct? Or are the numbers going to be like off by a little bit just because of the area? But we're precise, spot on this project right over here. So we're definitely going to be precise and spot on this deal over here. And the cool thing is, I can definitely get the property on the contract for this much for two reasons. One, it's been on the contract in the past, so I'm gonna figure out what happened then and what happened then that it didn't sell. Was it the property? And was there an inspection done that it needs more repairs than anticipated? Because I'm estimating roughly $90,000 worth of repairs. That's going to be the living space and the basement as well too, because I don't know what the basement condition is. And then two, the only reason I'll get on the contract this low is because it's where's it at? Where's it at? Where's it at? So one was because it's been under contract in the past, so that could be like another issue. But the other thing is too is just bring the offer into like the table where our offer is going to be cash, but also we're willing to pay the closing costs. That's why I always play the closing costs game, because again, that's going to be it's what our offer that we bring over to the table is the offer that the seller is going to be the money that the seller is going to be walking away with. The only thing they have to take care of on their side is the taxes of the money they're making like on that. But again, even title makes is gonna be getting done of that. And there's other tax exemptions as well too. So they could be walking away with the full $200,000 out of their pocket without paying taxes because there's what is it, 1044 or something like that, where if you're married, um, you don't have to pay taxes on the deal if it's like $500,000, or if you're single, then it's like up to $250,000. So it's just uh, I forget what the code on that is, but we're literally spot on this deal based on the comps. I didn't have to find comps. I was just trying to confirm the comps really quick. But I found like the ARV right away from Zillow, and then where my buyers need to be and what I'm able to get on the contract, then that's where I'm gonna be able to wholesale this deal because again, I'm the one putting in the work. I'm just bringing this deal over, and again, I'm overestimating too. I just know for sure $90,000. It's definitely way too excessive. I've seen $90,000, and this is definitely not $90,000. I'll estimate this one to be close to like 60 to like $75,000, honestly. But again, I'm just playing it safe and aggressive at the same time. So that's a deal right there. Honestly, yeah. If you're in this area of Worcester, Massachusetts, or a wholesaler, this could definitely be like a great deal. We looked at the area as well too, great area. The comps are not really great. That's the only thing I'll say. But the potential is there just because of what's under contract for right now. There's a couple deals under contract right now, and especially with this one, it can definitely be like a deal as well too. Let me remove all the filters, see what I'm able to find and what's under contract right now. See if there's more properties. 299, 280. So I don't see a lot of stuff selling less than that. What's up with this? 500,000. Yeah, yeah. Honestly, it's just a great area overall, honestly. So this is a definitely for sure a deal. So if you want to take this one, for sure take it because I already did the homework for you. Basically, all you have to do is just do the outreach. It's listed with an agent, so get in touch with the agent, find more details, and bring your offer in close to $200,000 and work your way up to the most being like 216. You can even start at 190, 190, 200, 205, 210, 215. That's it. Anything above that, it really doesn't make sense. And if you're not able to get the deal, play the patience game. See if it's like 60 day at the, I would say like 45 days. 45 days, 60 days marks. That's when you start reaching out to the agent again, like, hey, I'm coming back. I'm serious. We have the money. Like, where to go? Like, come on, let's make this deal happen. You agent, do you want to hold on to this any longer? Or are you trying to get rid of and move on to like something else? Because I'm trying to move on to my next project, and you're blocking me from doing that. I mean, I can look at other properties if you want me to, as well too. But I mean, like I already know for sure this is like a good deal for us. So it's literally about how you talk, honestly. So let's look now into a multifamily deal. Let's see what we're able to find as well too with some multifamilies on this area. And let me remove the pending under contract. So with for the properties that are a multifamily, I'm gonna look at the complete rental calculator. It's definitely gonna help me and guide me on a lot of those steps because again, same thing. It's just down to like the numbers, how much the property is going for, what the rents are going for, and of course go break down through like my expenses, and it gives me like the full analysis breakdown from there. So let's look for some properties in terms of like a rental and see what we're able to find. So let's change this to a multifamily as well. Let's get rid of houses and let's clear all of these filters. Go back to multifamily. All right, shabam. Let's find out what we're able to see. And for usually for multifamily, I look for properties that are already like in great shape. Maybe like this one, 575 $1,000 one. Let's see what we're able to get out of this. So it's been listed for on the market for 20 days. Close to museums, restaurants. Okay, first floor features 2 bedroom, 1 bath. Second floor, 3-1. And then the third floor, cozy second floor living room. Additional space includes 2 rooms that can be used as bedrooms or office space, 1 bath. Okay. Is it like a duplex or what? What is it? But I like just the condition of it as well too. It looks like it just got well maintained or it just got recently fixed up, honestly. But it's a little bit too expensive. Let me see if I can find something a little bit cheaper. Just a little bit. Never mind this nightmare one. Oh, but this is like a bigger one though. But usually with these have like not nightmare ugly looking ones, they have like tenants that are long term and they're like the tenants don't want to move or anything like that. So those are really good. So it's nothing too crazy. So let's look at this. Great location. Um, Tenants have been here since 19 and would like to stay. Just called it. It all for whatever reason, you always are gonna come across uh little things like that. It takes repetition, guys. It just takes repetition. But you see, it's just the tenants always want to stay. Um, each unit has electric, and second floor has been tastefully updated over the years, along with the first floor. Blah blah blah. All right, cool. So let's continue going through here. So I'll say this is like a good deal, honestly. Let's find out. 610 asking 3360. 610 asking. 16 asking 33 square footage. Let's continue going through the rest. So this size 9 bed unit ready for you. 9 bed units ready for you. Okay, so they're all, what is it though? How many tenants are there? Hmm. Each unit has second floor has been tastefully updated. I'm guessing they're all one bedrooms. Like I don't understand the bathrooms though. Is it three bedrooms? Three units, nine bed units, first and second floor tenants have been. I'm guessing it's like three units with three bedrooms, one bath. So they're three ones. That's honestly my big guess. They're all three ones. So I'm gonna use Zillow rent estimate for it. And I'm also gonna use Sumper. With Sumper, I'm gonna type Sumper rent, average rent in city, state, and city, state, and bam, there you go. Average average rent in Worcester, MA. Let me look for an apartment that is a three bedroom, one bath. See what we would go for. So 2100. All right. What about Zillow? Let me check through Zillow real quick. Let me copy the whole address. Bam, put it there. Let's see, 2000, 40, 4500, 4500. 4500. Okay, that's not bad. But the other one said 2000. So it's gonna be 4500 divided by 3. 1500. I'm gonna go with 1600 per unit. The other one said 2000. Okay, so I'm gonna take a guess. They're all three units, three bedroom, one bath units. So let's go over here. Three bedrooms, all on for 1600. So here, let's break it down real quick. So first things first is the asking price. They're asking $690,000. If I were to put 20% down, that's $138,000 cash up front. My monthly payment is going to be $4,050 principal and interest. Closing costs is going to be between 2 to 4%. So that's going to be an additional, sorry, 2 to 5%. I'm gonna go with like 4% closing costs. So I need a total investment $165,000 up front. But now let's check out the rents. The rents are gonna be set 2000. So I'm guessing it's like per unit. So I'm gonna go with like 1800 actually. Um, so between 1800 to like 2000, depending on how much they're already paying, because again, it says the tenants want to stay. Uh, yeah, I'm play safe. I'm gonna go with 1700. I'm going between. So 1700 per unit. There's three units that are three bedroom, one bath. From there, there's no garages, there's no laundry. All of them have their own separate stuff as well too. There's no extra storage. There's no way for me to bring like any extra income to this deal. So it's just how it's already pretty much set up into it. So no extra income. So all in total, my monthly rent is $5,100. My gross income for the year is $61,200. Now let's break down my expenses. I could break down my expenses down to like the dollar. Just like I go through here, how much I'll be buying the property. So home price, my 122 down payment. Let's do that. Let's do the rate to be like around 8%. Uh, and what's my payment now? So it breaks it down over here. Um, per month, it's gonna be property taxes is gonna be 604. Insurance 193. So let me put those numbers. So taxes. Wait, how much was it? Taxes 604 per month, 193 in insurance, 604 per month, 193 in insurance. There's no HOA. Maintenance is going to be like 8% of the rent. So 5,100 times 8%. Let's check it out. Times 8%. It's going to be 408. So type in 408 over here. Vacancy is going to be 10%. So 10% of the rent. So 10% of that is going to be 510. And property management is also going to be 510 as well too, or 10% of the rent. So all in total, my expenses are, if I break them down to like the dollar, is going to be $26,700. Usually for So it's a little bit more than my standard rule. Usually, if I were to have like a property management manage it for me, it'll be 40%. Um, for it. So whatever the income is times 40%. Or if I manage it myself, if I live in the area, then it'll be 30%. But I broke it down to like the dollars, and this is my actual expense. So $26,700. So now what I have is I have my gross income, I have my expenses, which is 26. I subtract those two. My net income is $34,500 or $2,800 each single month. Now, the only thing I do have to consider is I have to consider um, my mortgage. Part of this expenses is not my mortgage just yet, and my mortgage is a total of $4,000 each single month, which $4,000, which is called debt service. So $4,000 times 12 is going to be a total of $48,000. So now I subtract my net income from my debt service, and at this asking price, the property is just not bringing me any money or whatsoever. So there's two things that I can do for it to bring me some money. So this property is not cash flowing anything whatsoever. The cap rate is at 5%, which is really, really low, which is a high risk investment. So there's two things that I can do. One, I can make an adjustment on the price, or two, I can raise up the rents as well too. So if I look at the price for right now, the price they're asking is 500 $610,000. But again, the cap rate of this property is at 5%, so that's way too low. Usually I'm looking for something more than 10%. So let's say I put my cap rate at 10%. So right now it's at 5%. If I were to put it at 10%, let me put it at 10% real quick. And at 10%, it will put my asking price or my offer to be at $345,000, which is going to be 50% off from the current asking price right now. Um, oh, I messed up. I put it 690, 610. Maybe that's why I messed up. Hold on. 610, right? Yep. That's why I messed up. Never mind, never mind. Oh, let me see here though. I'm still not even making any money. Even after that $80,000 mistake, I'm still not even making any money whatsoever. So it puts my cap rate at 5.66%. I'm losing $8,000 each single year. Um, but even so, again, I still need to buy it close to like 10%. So that way it can bring me money. So my offer at 10% cap rate, it will be $345,000. Of course, the seller's probably gonna reject that for because again, they're usually the strategy on cap rate is you want to buy it at a high cap rate, and whenever you want to get rid of your property, you want to sell it at a low cap rate, and that's what the seller is doing. Is they probably bought it probably like 8, maybe 9% cap rate, maybe 10, who knows? And now they got it down, they're selling it at like a 5%. It's just because the property or the area valued up, so it's just how it is in terms of like real estate. So let me put my offer. Um, the lowest I'll probably go will be like 8%. So that'll be $431,000, which is a 29% discount from the asking price. So yeah, I'll definitely want to start like a 10% cap rate at a 10%. And like I said, the lowest I'm willing to go is 8%. So let me put this asking price of 430. So let's say I'm able to get on the contract for $430,000. Miraculously, somehow, some way, I'm able to get it. My rent stays the same. The only thing that dropped is my monthly payment on my mortgage and my initial investment, which is really good off the bat. I haven't raised up the rent just yet. But now my new cap rate is at 8%, and now the property cash flows. Now the property is cash flowing, so the new cash flow is now the property is cash flowing $4,200 each single year, which is a total of $350 each single month, which is not bad. That's what I'm looking for. I'm looking for the property to go to be positive. So if it's positive around 8%, that's probably, I definitely have to be really close to like up there. But again, I want to start low and then work my way up to like that number. I don't want to go straight to that because again, that's not really going to be helping it out in just like negotiations. Because again, I still have to go through negotiations from there. So at 430, it's definitely really good. How much more can I push it? That's the only thing as well too. Let's continue going. Let's go with like 480. So like $50,000 more. Just because I'm playing a worst case scenario, if anything. Um, Yeah, 480 is gonna be way too much. So yeah, so I'll say like between 430 to like 450. That'll be like the most to get out of it. So that way you're able to get like a good and safe but not so safe cap rate, just because again you want to make sure it brings you some money, and then cap rate again just basically measures a risk. We have this gross rent multiplier which estimates how long the property is gonna uh, break even, or how long it's going to take for you to make some money on this deal as well too, or start making significant amount of money on this based on the gross rent or the gross schedule income versus the price. Then we have like the debt service, the cash flow, the cash on cash return, the debt service coverage ratio, and also how many months is it going to take for you to break even overall. So this could take a total of like 2000 months, which is that's definitely like a lot. It's gonna be definitely a good amount of years, but uh yeah, that's not looking really too good. But overall, that's what the calculator does. It breaks down everything from there, and that'll be my asking price for it as well too. So if I'm able to get on the contract for that, assign the contract to like an investor, again, I'm able to bring it $200,000 below asking. So it just depends on who's doing the work, and the person who puts it to work is the one who's going to be getting paid like the most. And that's how you're able to wholesale some of these deals. So hopefully you guys were able to learn something from there. Um, but I'm gonna leave it open some Q&A. If you guys have like some questions, so if you want to retouch bases on anything, if there's no questions, it's probably fine. But I'm gonna leave it open for some Q&A. No questions. Nothing whatsoever. Nope, nothing. Okay. Well, it looks like that's a pretty much a wrap for today's event. I really appreciate you guys joining. Again, if you want to have access to the calculators, head over to eltonvargas.com/calculators and get your calculators or your C or the CRM. The CRM is only $17 if you want to get it. So thank you guys for joining. I really appreciate it. I'll see you guys in the next event on Friday at 6 p.m. Pacific Standard Time. All right, take care.